everyone, good morning. You're watching Market Fatafat on ET now. I'm Mubina Kapasi. Markets, well, we kick-started the day on a positive note, but it looks like we have sort of given up those gains. But here's another thank you to all our viewers for yet again keeping ET now on top of the chart. We once again emerged as India's #1 English business news channel with a market share of 45%. So here's us expressing our appreciation and gratitude for all our viewers out there for keeping their faith in ET now to delivering the best and unbiased news and analysis. But like I was saying, markets kick-started the day on a positive note, but we've given up a large part of our opening gains. So we were on track for gaining for the 6th straight day, but it looks like now we are in the red. And as we speak, the Nifty is at the day's low. 11,017, in fact, is where we are perched for the Nifty. Still holding on to the 11,000 mark. Sensex is well flattened out, 37,200 on the cards. The mid and the small cap, however, where the bounce has been seen for the last few sessions. Let's see if that's also ebbed into the red. And yes, it has, with a lot more vigor than the benchmark. So yet again, the mid and the small caps are back to their losing ways. Well, just the mid cap index for now. It's actually underperforming the benchmarks, but the small cap index, that's outperforming. It's managed to stay resilient, although, mind you, that too is off the day's high, but still higher by 0.5%. Well, we've been constantly getting you all the important voices from our series coping with the sell-off. Mark Matthews of Julius Baer prefers small and mid caps amidst the Indian market. He says the government's move to merge banks as well is a big positive for the sector as a whole. Listen in.
The economic numbers that have been coming out, of course, most recently, the quarterly GDP growth reading of 5%, that the growth is slowing down. And I think as much as India has many other attributes, the primary thing that will attract foreign money is growth. In the absence of growth, you won't get as much foreign money going to India because it is an expensive market. Within the small and mid-cap space, there are many good companies. We like the space generally. Absolutely, I would say, given its underperformance, it is a place to be buying things. Just look at the most recent reporting season. More companies missed than beat, so I do think that the earnings forecast will be revised down. I think that the move to consolidate that sector is a tremendous positive. Of all the pieces of news relating to reform, that is to me the most important, because there are too many banks, and reducing them will make the financial system much more efficient. Basically, two engines to any economy: consumption and investment. And the problem with India is the investment engine has basically been switched off or on very, very low gear for the last few years. And given that there's no real sign of the investment engine picking up.
Okay, the show is Market Fatafat, where we flag off all the individual movers and shakers. And to do that, we have with us from our research team, Soumya and Varun. And very shortly on the technicals, we'll be joined by Richard Jain as well of Angel Broking. Good morning to you guys. And let's start off the show with OMCs. Today, BPCL is gaining very smartly. Although, mind you, with the fall seen in the market, there may be some sort of weakness that may have ebbed into BPCL as well. But nevertheless, Citi believes that the order of benefit is BPCL first, followed by IOC, and last HPCL. Now, Citi says that the OMCs are currently offering strong fundamentals with earnings momentum, positive earnings momentum as well. And accordingly, they've placed their target price for BPCL at 475 rupees per share, and for HPCL, it's at 360 rupees per share. So really not bad at all for, these two counters. Additionally, they're also saying that the signs of IMO are starting to play out. Competition is, of course, not a game changer either. And do remember that these OMCs have sort of given a slow death to their daily pricing revision norms, because remember that for the last 2 months, we have seen days at a stretch where there was no change in pricing. So that as well was an interesting development. HPCL, BPCL gaining approximately 1%. Soumya, today chemical company Sudarshan Chemicals is gaining very smartly. What's the trigger?
Yes, and this one's on back of a very bullish note by Axis Capital, wherein they have initiated a buy rating on the stock with a target price of 410 rupees per share. In fact, they believe that the company's focus on specialty pigment is definitely garnering well from it, and in fact, they've planned 40 to 50% of capacity expansion over the next 3-4 years, which will help them expand their reach, and of course would help them go into the international markets and also go for product launches. And not just that, in fact, the company is also focusing on selling the non-core assets and business segments and streamlining their capital allocation, and this is definitely going to augur well for the company. And of course, they are expecting 12% volume CAGR driven by specialty pigment and margin expansion as well. So this is definitely keeping the stock bullish today, which is higher by over 5%.
Yeah, that it is 5.1% higher for Sudarshan Chemicals today in trade. Today, of course, insurance companies as well will be in focus. We did have the numbers for August that came in. Namira has a note on that one. But for SBI Life, it's another piece of news that's going to keep that stock active. Varun, what's that?
SBI, the parent company, will be selling a stake in SBI Life. We'll be generating around 3,500 crores from this sale. Now, the floor price for the OFS is set at around 770 rupees, which is why, in my mind, the stock is a little down today. It closed at around 798 yesterday. Now, SBI Life is really promising company. It's given a 14% return in 3 months. Its forward PE is around 55 times, which looks expensive, but when you compare it to HDFC Life 75 times, you definitely see the value proposition there. Now, strong distribution network, cost control measures, and, high margin protection business, which really seems to be picking up traction now, are the major triggers that will lead for like a return on equity value of 18%. All very healthy, one of the better picks in the insurance space.
All right. Well, yeah, nothing compares the HDFC Life really, which has seen a tremendous rally, stayed at its lifetime high for the most part of the market carnage that we saw in the last couple of, 1-2 months. Okay, we also did, in fact, speak to Dinesh Kumar Khara, MD of SBI, on this very news. The OFS, of course, remember, is underway. Like Varun said, SBI selling 4.5% stake. And this is, of course, to achieve that minimum public shareholding. They also said that they will sell more stake in the coming quarters to meet those norms. Listen in.
We have proposed a dilution of 3.5% of our stake in the SBI Life with an option of oversubscription of 1% via this offer for sale to achieve the minimum public shareholding. That is the reason why we are offloading this stake. In fact, currently, promoters, both BNP, Paribas Cardiff and SBI hold 67.3% stake in the company. SBI is holding 62.1% and Cardiff is holding 5.2%. So we have launched this this sale at a floor price of rupees 770 per share. And post-sale, our stake in the company will be 57.6%. And of course, the sale of share to occur today and tomorrow. We'll have some more also, which we will do it over a period of time. It is essentially to meet the MPS requirement, which we have got an obligation, which we need to comply with by end of September next year.
All right, that of course is Dinesh Kumar Khara speaking to ET Now on the news. We have with us Richard Jain as well joining in on the show. Richard, I must start off by talking to you about the mid and the small cap index. Yes, the mid cap index as we speak has completely ebbed off from the day's high, but the small cap index is resilient. The bounce that we've seen in the broader market, so at least in that index, does continue. Do you believe that these mid and small cap names could perhaps generate some more returns going forward?
Yes, hi, very good morning. Well, although we have seen some profit booking from the highs in today's session, but if you look at last 1 week, both the indices mid cap as well as small cap has done reasonably well and has given a decent pullback from their lows. And if we look at many of the stocks within this space, then there have been good volumes in the up move in last few trading sessions. So I think it would be too early to take a call on the small cap names, but at least the quality mid cap names would tend to show some outperformance in near term. And also, if we take out some time wise retracement in the mid cap index, then September month probably seems to be one where we could see some further outperformance. So we are positive on some of the mid cap names, and especially the quality names where we can see good volumes. They could tend to continue the outperformance.
All right, that's the view on mid and small cap names from Ruchit. One stock that's really buzzing today in trade is Tata Power. Today, Citi has maintained a buy stance on the stock with their target at 76 rupees per share, as they believe that at this level of between 61 and 64, the stock is not expensive anymore, and it's trading lower than the one standard deviation below its historic price to book value. Of course, the whole Mundra UMPP resolution as well has reached its end game. They would, however, wait for any non-core asset divestment led deleveraging that will essentially provide a fillip to its numbers on the balance sheet and the P&L as well. But you can see the stock price rise. In fact, it was high by 5% at one point before ebbing off from there. Tata Power is a big gainer today in trade. And Soumya, more stake sale news amid the banking and financial name space. Canfin Homes, what's the news over there?
12 entities have expressed interest to acquire Canara Bank's stake in Canfin Homes. And remember, post its amalgamation with Syndicate Bank, Canara Bank is looking to completely exit their stake in the housing finance company, and they'll be offloading close to about 30% stake in this one. And Canfin Homes is definitely one of the better placed NBFCs and is definitely gaining a lot of eyeballs when it comes to investor interest, and we are seeing and that's what the reports also tell us, that the company has received, Canara Bank has actually received 12 bids as far as Canfin Home stake sale is concerned.
Okay, for now it's 0.5% higher, Canfin Homes, and we will wait by for any sort of announcement that comes in over there. Ruchit, you can't ignore the move seen in some of these steel stocks, Tata Steel, JSPL, all of them seem to be continuing the recovery that we saw, yesterday in trade. Of course, Tata Steel as well is off the day's high, but it was gaining almost 2% beyond the 380 rupee mark. Do you believe that this can continue?
So if you see last 2 or 3 months, the metal space has been a big underperformer. We have seen a lot of short positions which were built in most of the metal names. And this series so far we have seen some good short covering move along with fresh long formations. Tata Steel, if you look at recently, the prices have corrected right from 480 to 320 without any meaningful bounce back. And in this bounce back, even if we take a minimum 38.2% retracement of this correction, then this gives us a target projection of around 388, 390. So I think that we could see the stock testing further higher levels around 388, 390 in this month. So any existing long positions could still be held on.
Okay, any existing longs can still be held on to according to Ruchit in Tata Steel. Moving on, Varun, RNAM, again an OFS going on over there. What's the response looking like, because the stock has tanked since morning?
So based on our reports, the stock reaction is quite surprising, but I mean not really that surprising because it's come to the floor price set for the OFS, which was 262. Now the OFS opened yesterday, it saw strong subscription, I believe it was oversubscribed. It was issued at a slight discount to yesterday's closing market price of 276. Now RNAM as a stock has done well in the last 3 months, it's delivered around a 26% return. Its forward PE is 32 times. Now I want to compare it to pure average of 46 times, and in the case of HDFC, AMC around 56 times. So given RNAM's healthy growth in AUMs and strong return ratios, there should be some bridging between the multiples here, an upside trigger for the stock.
All right, it's 5% gone for RNAM, at least in today's trading session. Okay, all cargo logistics, and here's a report-based story that has hit the papers this morning. Well, it's positive news. It's good news essentially, because as per reports, Blackstone is planning to pump in around 1,500 crore rupees in one of our all cargo's units. It is in fact considering owning a majority stake, a 51% stake in the venture. This is of course a source-based story. Now they essentially want to tap into the expanding demand for warehouses in India, because do remember you have Amazon, Walmart, all spending billions to expand in, one of the world's fastest growing e-commerce markets, that's India. So Blackstone as well wants a piece of that pie, and hence they are planning to build 5 million square feet of warehouses across India. This they want to do so via the unit that belongs to All Cargo Logistics. The stock was actually higher in trade by almost 1%, but again it's ebbed off from the day's high and is in fact losing now more than 1% in trade. Richard, one sector that continues to underperform in trade despite the bounce seen in the market, or that you could earlier see in the market, is the IT space. Third straight day of a decline for that index. Any view that you would have for its constituents like TCS?
Most of the IT names were outperforming the markets when the broader markets were correcting. You see, last 3 or 4 months when the mid-cap stocks and the large cap, even other large-cap stocks were correcting, at that time IT space was one place to hide, and that's why we had seen some good outperformance. But now last 1 week when the mid-cap and the broader markets have seen some buying interest or pullback moves from lower levels, you can clearly see some profit booking taking place on many of the IT heavyweights. I think that in near term this underperformance, there could be some underperformance in Nifty IT space, and some sort of consolidation could be seen. As far as specifically TCS is concerned, the 200-day moving average is placed around 2070. I think those levels should be tested. So for time being, unless we see any kind of reversals again, one should avoid IT space, at least from a near-term trading perspective.
All right, that's TCS for you. Today it's down by 1%. Let's take a look at the RWI small case and see what that one's up to. Has it as well succumbed to the selling pressure that the markets have seen? And well, it's absolutely flat, 525 yet again on the index. Just a bit of a positive bias seen, but let's see if that sustains. And of course, once again, we'd like to thank all our viewers for keeping ET now at the top of the charts. We are once again emerged as the #1 business news channel of India. Quick break right here on Market Fatafat. We will be back with more movers and shakers. Market Fatafat on ET now. Let's continue with the countdown of movers and shakers. Soumya, Emami, the entire group stocks are gaining today in trade. What's the trigger?
Talking about Emami particularly, we have Dalmia putting in bid for Emami's cement business, and they've planned to go solo with this bid. In fact, this entire Emami's business is valued at an approximate value of 6,000 crore rupees. So that's what the latest when it comes to Emami, and as a result, we're seeing a smart uptick coming in the stock, which is gaining close to about 3.4% in trade today.
All right, Emami, one of them is high by 3.3%, but otherwise Emami Paper, Realty, smaller stocks, of course, are as well gaining. Varun, Apollo Hospital is a big news maker. What's the news over there? Although the stock has completely slipped off from the day's high.
Yeah, Mabina, well, it was up considerably in the morning. I think at one point it opened up almost as high as the circuit. So the promoters are looking to sell around 725 crores worth of equity. Now the proceeds are to go towards debt repayment, obviously, and to remove these pledges which are an overhang on the stock. The total debt for this company stands at 3,500 crores. We know recently they struggled to meet near-term debt obligations and had to raise money on emergency line from Credit Suisse. This money also was only invested once they said that they would be selling a stake in their JV to HDFC for around 1,300 crores, 1,000 crores of which was supposed to come to the promoters, and the balance 300 for the company. So it's auguring well. In general, the street is averse to pledges and debt, so paring that down via stake sale is a piece of good news. I think they'll be selling 5 million shares at a price of around 14.50 per share.
Okay, that's Apollo Hospitals is now losing around 0.25%. But we have one stock that's really gaining, and that's Walchand Nagar Industries. It's a small stock, the market cap is a little low, but it's worth noticing that 17% surge that's come by in the stock price today. This is on securing an order worth a little over 77 crore rupees plus escalation from the Vikram Sarabhai Space Center of ISRO in Trivandrum. The order is, of course, towards manufacturing and supplying certain aerospace equipments like the head, middle and nozzle end segments of a launch vehicle. It will be Walchand Nagar's second largest single order from ISRO. So that is something company did announce yesterday, and it's of course a significant milestone as well for the aerospace business of Walchand Nagar. It contributes significantly to the order book as well of a very strategic segment that does enjoy high margins as well. So 18% higher for Walchand Nagar. Ruchit, HEG has been surging very smartly. It's once again been able to reclaim 1,100 rupees after seeing a couple of tough months. What do you make of the move?
So this stock has been a big underperformer in last few months. In fact, if you see post September 2018, there has been a massive correction from its previous highs. I think one should take this just as a pullback move. It doesn't seem to be resuming its any kind of uptrend over here unless we get a higher top high bottom structure. The near term resistance is to watch out for 1150 followed by 1250. So I won't be much excited to create any fresh longs over here, but any existing longs, any pullback moves towards 1250 could be used as an opportunity to exit from the stock.
Okay, but on that note, we are out of time. So Ruchit, Soumya and Varun, thank you for joining us on Market Fatafat. But here is what we had discussed yesterday on the Money Show. Remember, the IRDAI is considering linking your car premiums to how you've been driving on the road. The more rash you are as a driver, the higher the premium that you will have to shell out. So folks, this is a message that you'll have to be careful that when you are driving, if money is an incentive for you, of course. We caught up with Sajja Praveen Chaudhary of PolicyBazaar.com to sort of get a precursor, a preview of what the rules could be in the next 7 to 8 months that will be released by the IRDAI. As we wrap it up, listen into an excerpt.
IRDA has constituted a working panel who would understand how this works in the international, in other countries, and then figure out how to put this point system in place across states, because we're a large country with many states who work differently, right? So to put in place different point system for each and every offense, and then figure out how the data comes into one system, and then how to share this data with insurers or anyone, and then how do you actually link these points back to insurance premium? How is it going to affect? Is it going to increase? It's going to decrease? What kind of offense will be considered to be a minor? What kind of offense will be considered to be a major one? So that's, and they're supposed to come out with the initial recommendations within 8 weeks. Probably post that will be up for a public draft, and then finally it becomes a rule kind of.
On an average, I mean, is it like, if we are, from some reports that I've read, we are trying to adopt the US model or the European model. This is roughly what I have read. And I know for a fact that in the US, you're paying really high premiums. So how far are we trying to sort of inspire ourselves from the US model?
No, so it's obviously it will be the Western countries like US and UK would inspire to an extent because they've evolved over this system over a period of time, right? So we might borrow some of those from those countries, but because India is a very different country with so many states and different kind of roads and different kind of traffic conditions. Like for example, in US, a traffic rule says that there are rules to enter into a road and who will enter first, who will enter later on. While in India, it might not matter. So we might borrow certain things, but it might not be exactly the same.
Okay, that brings me actually to another point. You mentioned different states. Now, just today, we interestingly had Gujarat and Tamil Nadu saying that, hey, listen, we are not going to charge our drivers such high and ostentatious fines, if you could call it that, which is pinching a lot of pockets already. Does the same apply for insurance premiums as well? Does the law work that way, or it's different?
The insurance premium is decided by the insurance company, and that predominantly is guided by either the Indian Motor Vehicle Act or the Indian Motor Tariff, or what the IRD comes out with from time to time in terms of rules. So I don't see that such a state subject or a state coming into play in this scenario. Unlike the traffic violation or the traffic fines that we're looking today.
But when are we looking at these things being implemented? While, of course, that's not to say that you should start driving well only after that certain date. I think, since you're saying that backdated history as well, but by when are we looking?
So basically, I think the panel is going to take about 8 weeks, which is 2 months to submit the report, and then the final, generally if you go by history, probably under a couple of months to finally to come out with draft, and then a month to roll out. Probably 2020, somewhere around April is what a realistic timeline might be, but they're looking at Delhi NCR to start with. So let's see.